which is a partnership between the Commercial Fisheries Center of Rhode Island and also the Small Business Development Center. And this program was developed to support and assist fisheries and seafood businesses through the pandemic, and also to help them thrive in the long term. So it's tax season, and tax planning is something extremely useful for any business, but particularly for fisheries and seafood businesses, and also for individual fishermen, as tax schedules and forms can be really complicated and confusing. So we thought hosting a webinar on this topic would be not only helpful for fishermen and fisheries businesses, but for a wide variety of small business types. So today, Yashwant from the Small Business Development Center is going to present an introduction to tax planning. After the presentation, there will be opportunity for questions. So you can feel free to use the chat function should be at the bottom of your screen. And we just ask to please keep your microphones muted during the presentation, just to minimize any background noise. And I also just want to make everyone aware that this webinar is being recorded. So this is going to be able to serve as a resource for those folks who weren't able to join us today. So yeah, just keep in mind, everything here is being recorded, and this is going to be posted to our websites following the webinar today. But again, we'd like to thank you so much for joining us. And with that, I'm going to hand it over to Yashwant.
Thanks, Shay. Good afternoon, everyone. Like Shay said, in this series of Fish Forward webinar, this is a webinar about basics regarding tax planning and reporting for small businesses. My name is Yashwant. I work at Rhode Island Small Business Development Center. Fish Forward is an initiative to empower fishermen to set up their own businesses if they choose to sell their product to the customer directly. We at SBDC are partnering with CFCRI, the Commercial Fisheries of Rhode Island, to work on this project together. We bring our expertise from business and entrepreneurship side of things, and CFCRI brings their experience with the knowledge of Rhode Island fisheries. As an SBDC advisor, we work with the entrepreneurs of Rhode Island and to set up new businesses, and also work with existing businesses. In this case, if you're looking to start your own business for direct sales to the customer, or if you're an existing business looking to pivot or modify your business plan, which we've seen happen quite a whole lot given the pandemic that has happened. So in this series of webinar, this is especially for tax planning for entrepreneurs who are interested in starting their own business, and we'll look at what type of taxes to file depending on what type of business you are. First and foremost, what is tax planning? It is the analysis for your financial situation to ensure that all the elements for your business that you set up work in a good flow, so that you're able to pay correct and lowest possible taxes. Which brings me to the question of where does one even start tax planning? We'll start from the basics here, and while you can start tax planning even before you have set up your business, depending on how you set up your business, you will have different tax structure beginning right there. And this can depend on several factors like the timing of the income, the size of your business, the timing of your purchases, the planning, expenditures, etc. So different structures, different entities will have different tax structures, and your business tax structure definitely impacts your income tax payments and the forms you use when you file your taxes. For example, there's partnerships, sole proprietorships, S-corps, and LLCs, limited liability companies. These are not taxed separately on their profits. Instead of that, the profits are passed through to the businesses, to the owners who report business income tax or losses on their personal tax return. On the other hand, a C Corp or a corporation is the only type of business that must pay its own income tax on the profits. More specifically, for federal income tax purposes, there are 4 major forms of businesses, each of which uses its own tax forms. First, we'll look at sole proprietorship, and these are required to file profit and loss form for businesses, sole proprietorship forms, Schedule C or Schedule C EC form 1040. And you list your income and expenses on Schedule C to determine your net profit. And then the profit is listed on your tax return, which is the form 1040. If you choose to start a partnership, you're required to file a U.S. return of partnership income, Form 1065. And the partnership must file this form annually to report the income, deductions, gains, and your losses. The partnership also has to furnish copies of Schedule K1, the Form 1065, to its partners to report their profits and losses as they are passed through to the partners. And then each partner also includes his or her share of partnership's income on their tax return. S corps are required to file income tax return for S corp in Form 1120S. These corporations elect to pass corporate income losses, deductions, credit through to their tax holders for federal tax purposes. And shareholders of S corps are issued Form K1 showing the income that the shareholders receive through the corporations. The shareholders of the S corps report the flow through of income and losses on their personal tax return. And lastly, we have C corp, which are required to file the U.S. corporation tax return, Form 1120. A regular corporation, which is also known as a C corporation, is a separate entity under the tax laws. Any income that is earned by a corporation is normally taxed at the corporate level, and the corporation must file the Form 1120. After the corporate tax is paid on the profits, any distributions made to the stockholders are taxed again at stockholders' tax rate as dividends. So essentially, that is the difference between a corporation and a C corp. Without diving into too detail, the profits for a C corp are taxed twice versus for S corp, they're taxed just once. Lastly, we have limited liability companies, but these aren't federally recognized as a separate entity or a classification for federal tax purposes. They have the option to file as a corporation, a partnership, or a sole proprietorship for tax return purposes. No matter what business entity you are, you have to pay several types of taxes. And we'll take a look at each of these taxes in a little detail. The first is something that almost everyone is familiar with, the income tax. And your income tax is based on your net profit. This is determined by subtracting your business's expenses from its income, and business expenses are those that are ordinary and necessary to operate. Sole proprietorships, limited liability companies, and S corps show their net profits on owner's personal income tax form, and C corps pay corporate income tax, which is taxed at a higher rate. Next, you have self-employment tax. And if you're in a business for yourself, or including a part-time business, or carry a trade or profession as a sole proprietor or an independent contractor, you are generally considered by the IRS to be self-employed. And you may pay self-employment tax, which is also known as the Social Security and Medicare taxes. You have to pay self-employment tax if your self-employment earnings end up being $400 or more. And the self-employment tax is currently 15.3%, of which Medicare accounts for 2.9% and Social Security for 12.4%. On the other hand, if you do have employees, be aware that there are several employment taxes, and some of these are paid by the employer, some by the employee, and some of them are shared by the two. Employers withhold the federal and state income tax from the employee's wages. Employers withhold a part of Social Security and Medicare taxes from employees' wages and pay a matching amount. Employers generally pay the federal and state unemployment taxes. You report and pay it separately from other taxes, and employers also pay into the state disability program. Another one is an excise tax. You may pay excise tax if you manufacture or sell certain products, for example, or operate a specific type of business, or use certain kind of equipment. This can be anything such as a heavy vehicle, such as trucks on the highway or indoor tanning services. We have sales tax, which is something we have in Rhode Island. It actually exists in 45 out of the 50 states in the US. Retail sellers are required to collect tax from the customer, and then eventually you turn it over to the appropriate state agency for the collection. In Rhode Island, this happens to be 7%. And finally, there are local taxes, which are very particular to your case and situation. You may be responsible for real estate tax, personal property tax, and most counties and cities require businesses to acquire licenses and permits, which you can find out at your local district offices. So let's say you are a business owner who employs several employees. We'll look at some of the taxes and forms you need to be aware of if you hire others based on what type of employment it is. First and foremost, there's federal employment tax, which includes taxes employers are required to withhold from their employees' wages and taxes the employer pays. You need to manage payroll accurately to compute and collect the appropriate taxes, and then you must pay those taxes to the appropriate agency on a monthly, quarterly, or annual basis. The employment taxes can vary depending on the business, location, and other factors. Each business will have its own specific needs. You can start by registering simply as a new employer with the IRS and your state employment department. The common federal employment tax you file as an employer are, the first one is the federal unemployment tax return form 940. And you file this with the IRS annually to report your amount of federal unemployment tax for your employees. And the next is the form 941, which is the employer's quarterly federal tax return. And this form is used by employers to report their employment taxes, withholding amounts, deposit amounts, and amounts due to the IRS. Form 941 also includes total number of employees, total pay for the quarter, an amount withheld from the employee's wages, and the taxable wages for that period. If you're an existing business and applied for any state grants, the Restore RI grant, you may remember using this form. This was one of the eligibility for filing that grant. Next, we'll look at some employment tax and forms. When you hire someone to work for you, you have to file tax forms. Some of the forms that you will need to be aware of if you hire others, either as employees or independent contractors. These are W-4 form, and this form is completed by employee right at the beginning of the job to indicate their employment tax situation. This can be exemption or just their status to the employer. The W-4 form essentially just tells the employer the correct amount of tax to withhold from the employee's paycheck. Next, you have the W-2 form, and this is the form that an employer must send to the employee and the IRS at the end of the year. The W-2 form reports the employee's annual wages and the amount of taxes withheld from their paycheck. And lastly, we have the form 1099. The W-2 form is used to report wages to an employee, and you will use the form 1099 if you pay independent contractors to do work for your business. And generally, if you pay more than $600 during a year to someone other than a corporation in the course of your business, you must file this form, which tells you how much you paid to the person. And to report payments on 1099, you must obtain the person's tax identification number, which is usually just their social security number. In addition to business taxes required by the federal government, you also have to pay state and local taxes. Each state and locality will have its own tax laws, and it's good to have a knowledge of your tax requirements before you start your business to avoid any problems, and also allows your business to save money. Some of the local issues that you could inquire about are the first is the state income tax, which is collected by most states, including Rhode Island, from individuals and businesses. This can be anywhere between 3.75 to 5.99 in Rhode Island, depending on the income bracket. Then you have the permits required by local jurisdictions, depending on the type and location of your businesses. For the folks in fishing industry, you're familiar with this and the next one as well, which is licenses. Local jurisdictions will often require businesses to purchase business licenses. For fishing industry, this can be a peddler's license if they choose to sell their product directly. And if you choose to run a business that has a different name than your own personal name, you have to obtain a fictitious business name permit, also called as the DBA, doing business as. And this is how the community knows the name of your business. You used to have to go in person to file a whole lot of these forms, but since the pandemic, you can file these forms online. Next, we have the state sales tax, which we talked about earlier. If you sell retail products, most states will require you to collect sales tax from the customer. For the state, for Rhode Island, again, it is 7%, which is governed by the state law. It is important to know it is important to know that your form of business determines how you pay your income taxes. So we'll look at some money management for your taxes. And just as employees have some of their earnings from paycheck withheld to pay taxes, business owners also need to pay taxes to the IRS on profits as they are earned throughout the year. These estimated payments are made during the year and are used to pay income taxes, self-employment tax. And if you did not pay enough, you may be charged a penalty. There are quarterly payments if you are filing as a sole proprietor, partnership, S corp, shareholder, or a self-employed individual. You have to make estimated tax payments throughout the year if you expect to owe more than $1,000 or more when you file your tax return. For a corporation, that limit is set to $500 or more, and you can use Form IRS 1040-ES to calculate your estimated tax. Typically, business owners will pay taxes to United States Treasury quarterly based on the profits till date. Federal income tax and state employment self-employment tax are paid quarterly in combined payments through the month of April, June, September, and January. Most states require quarterly estimated income tax payments as well. The calculation for your taxes will depend on your tax year. And this is generally the calendar year, but it can also be any fiscal. You can also create your own fiscal year, which can be any 12-month period that ends on the last day of any month except December, which just makes it an annual payment. So sure, taxes are complicated. There's no denying it, but we can definitely take steps to make it less tedious and burdensome. First and foremost, it is very important to establish a system to manage money for your tax obligations. Taxes are generally due monthly or quarterly, and you need to have money in your bank when it is time. Business owners sometimes make the mistake of spending tax money on business operations, and then when taxes come due, there's shortage of funds. First, as I mentioned earlier, find out what taxes you'll owe and when they're due, and estimate the amount. There are several types of taxes you could be responsible for, as we looked at them earlier. For income taxes specifically, you need to set aside a % of your net profit to pay the quarterly tax estimates. And if you're a retailer, you need to set aside the sales tax that you collect on each sale so you can pay to the state sales tax agency. For employers and employment taxes, you need to set aside your portion of Social Security taxes and the taxes you withheld from your employees' paychecks. And you can use separate bank accounts to set aside tax funds, or you can use a business accounting software to keep track of the funds so you know how much is available for operation and what is off limits, because it is the reserve you will need to pay your taxes. And we'll touch more on accounting software later in this presentation. I said this on the last slide, but I will repeat it. Never use your payroll taxes for working capital during cash flow shortages. This happens more often than one would want to. So we agree that taxes can be complicated, but some of the ways to make things simpler for you, we will take a look at some of the accounting systems and methods that we can employ for your business. First of all, there's deductions. To reduce your taxable profits, you can deduct many business expenses such as rent, utilities, inventory, advertising, website development. These are just very few examples. The list is limitless. To be deductible, though, a business expenses must be both ordinary and necessary. And an ordinary expense is the one that's common and accepted in your field of business, trade, or profession. And a necessary expense is the one that's helpful and appropriate for your business. It doesn't have to be indispensable to be considered necessary. You can check with IRS website or your accountant to learn what can and cannot be deducted from your sales to determine your taxable net profit. Some of the tax deductible expenses for self-employed fishermen, for example, can include foul weather gear, work clothes, licenses, certain subscriptions to, for example, national fishermen, and mileage and travel for other than just to and from the vessel. So anything, if you can prove that's essential for your business, you can have that as a deduction. Next, you should have a good bookkeeping system that tracks all your incomes and expenses. Your bookkeeping system should consist of tools that document your business's sales and expenses. You can also use a business accounting software to help you track and organize income and expenses. With the help of reliable sources, which can be accountants or the IRS website, you can create your own company file with this software. And the software will do all the work and organize all your incomes and expenses according to the generally accepted business accounting principles. It will then automatically generate your net profit, which is the basis for calculation of your tax obligations. Your business accounting software can also help you know what sales tax you owe. And if you use a payroll service, it will give you reports for what you need to file and pay for employment taxes. Two reports that are particularly useful that are generated by accounting softwares are the P&L statement, the profit and loss statement, which shows the income and expenses for the businesses for that given time period. And then the balance sheet, which will show your assets, liabilities, and your equity in the business on any given date. Now, this might sound redundant, but it is important to keep your documents that support the entries in your book and your tax return. Keep them in an orderly fashion, in a safe place. For instance, you can organize them by year, type of income or expense. As long as you have some system that makes sense to you, that's great. You must keep your business records available at all times for inspection by our IRS, and keeping good records, receipts, statements, checks, invoices, your registered tapes even. It will just help you know your net profit and your associated taxes. And if ever the IRS examines any of your tax returns, you may also be asked to explain the items that you have reported. And another reason to keep a good track of all these receipts is recently when all the grants came for COVID-19, these were asked as a part of the application process. So not just for tax purposes, but you never know when you're going to need these. And finally, when you have the accounting system, it can be based off of two methods, cash and accrual, that affect the calculation of net profit. And I just want to make a note that overall, the actual profit you make is the same. It's just the documentation style that differs. And it differs in regards to the timing of when the transactions happen, including sales and purchases, when they're processed by your software program. Specifically, the cash method, which is commonly used for small businesses, the income isn't counted until the cash or check, for that matter, is actually received and deposited, and expenses aren't accounted for until they're actually paid. On the other hand, in the accrual system, income is counted for when the sale occurs, and expenses are counted when you incur them or they are deducted from your account. You don't have to wait until you receive the money or actually pay the money out of your checking account to record a transaction. So financial management, why not do it yourself? Why get a business accountant? Or can you even do it yourself? Well, of course, you can get help from the Internal Revenue website or the Small Business Administration website, or a tax advisor, for example, an accountant or an enrolled agent. You don't have to have an accountant to manage your finances or pay your taxes. Many people will do it themselves, and the IRS provides complete information in its publications for how to manage your business tax yourself. You can fill in forms by hand, or you can purchase tax software programs such as TurboTax or Sprint Tax, where you import your business bookkeeping software data. It is important to, however, note that a qualified business accountant will provide quite a lot of services. You need to assess your skill and time availability to learn how to file your taxes. You should also consider whether it supports your business management and growth to spend time on tax management and filing. Some small businesses will make do with a bookkeeper, just someone to perform the task of recording financial information, creating financial statements, and just filing taxes. But accountants are experts for a reason. A good small business accountant will do much more than just recording a transaction and simply generating documents. They will actively analyze and interpret information to help you run your business better as well. And they can give you advice or make qualified referrals for loans. And your accountant is often a good advisor in terms of if you have a new idea or a change or want to expand your business. But you should also know that not all accountants will have small business management skills. So usually when you're looking for an accountant, look for one with a track record with small business clients. And you can also ask small business owners or in your community who they work with. In addition to tax preparation, qualified business accountants are also able to help you with business consulting. Some accountants will have many years of experience working with business owners. They can provide insight, examples, and information to help you grow your business. You can get all sorts of advice from friends and family, but there's a reason it's free, and it's the same reason why accountant charges what they charge for their services. An accountant can also help you understand how to set up for your retirement plan, or if you want to purchase a home or navigate change in your personal circumstances. And as discussed earlier, there are several legal structures for business. A certified accountant can provide information on what options are available in your state or what even works best for your business idea. Your accountant can also refer to an attorney who can provide you customized advice and assistance in your business formation. Next, if you need a loan to grow your business, an experienced accountant can help you in determining what type of financing is appropriate based on your business, what you can afford, dealing structure advice, referrals for loan resources. And lastly, if your business gets audited, your accountant can help provide information and explanations to the auditor. And most small businesses won't ever need a reviewed or an audited financial statement, but thinking long-term, if you ever want to do outside investments or want to be incorporated, a business owner might need reviewed and audited financial statements. And the only entity who can do these are certified public accountants. So to round things up, we'll go over some key points. First and foremost, get qualified advice. It will and can cost money. Before that, if you'd like to learn more about tax planning and reporting, IRS has developed courses on managing taxes. We will put the link for these workshops in the chat. Next, a business may be required to pay several types of taxes. Find out what requirements are for your specific business that apply to you. Some business owners, again, I think I'm saying this over and over, business owners will make a mistake of spending tax money on business operations, and then when taxes come due, there's shortage of funds. You can expect to face significant penalties if you don't pay your taxes when they're due. You need to have money in the bank when it is time to pay taxes. Avoid mixing your tax funds with other funds. Have a good accounting system in place. Accounting system will help you track your income and expenses to help you calculate and file your accurate taxes. Having a good understanding of taxes along with good accounting system will help you plan ahead for managing your money and pay your taxes on time. Good small business accountants can do much more than just record transactions and prepare reports. If you choose to go that way, accountants will interpret your information that will help you to run your business better. And taxes can seem complicated to a new business owner, but you can do it and you have to do it. You have to invest time in learning, ask questions, get qualified advice. It will become a part of your routine as a business owner. And you find out the amount and process for your federal and income state tax and all the others that are particular for your business. Don't borrow tax funds for daily operations. Create a plan setting aside tax money that you can pay on time and avoid penalties. And there are so many software to choose from if and when you decide to choose one for accounting. If you do sign up as an SBDC client, you can get QuickBooks at a reduced rate for a limited time. The way it works is you get a 50% off. The first month is free, and then you get 50% off for the rest of the year. And at the Rhode Island SBDC, we also offer free training on how you would like to use these. If you'd like to learn more about it, we can set up a workshop with our QuickBooks expert that can assist you navigate the software as well. We will also put a link in the chat if you want to try it out as well. And if at any moment you want help on how to use it, please feel free to reach out to us and we can set up tutorials with our QuickBooks expert as well. Having said that, we will open for any questions if anyone has any. Thank you.
Thanks, Yashwant. If anyone has questions, you